Hello, my name is Steve Bigelow with the Candlestick Forum. When you can easily recognize the direction of the market trend based upon candlestick charting, it also allows you to put on the appropriate option trading strategies. As we can see, when the Dow broke this wedge formation to the downside, showing the failure right here at the top resistance level with a bearish harami, and then breaking this level with a strong down day, the assumption is from this point, we're in a downtrend. How long will that downtrend last? We don't know, but the logical first target would be the 200-day moving average. Same scenario on the NASDAQ. When it failed to hold up above the T-line, the downtrend started. It looked like it could possibly have a little bounce here off the 200, but Friday's gap down told us here's the next likely target. Now, those are likely targets. Doesn't necessarily mean it's going to go there or necessarily mean it's going to support there. All it tells us is we're probably moving in the direction of the targets that everybody else is watching. Same scenario on the S&P in a downtrend. Stochastics not yet in the oversold area. Waiting to see whether they're going to support here at the 200. We also know that the majority of stocks are in a downtrend. However, there are a couple sectors that are picking up strength. You want to watch the shipping stocks and the oil drillers. The oil drillers, we're still recommending BORR. Look at the little bullish flutter kicker signal that occurred on Friday. Not quite a bullish flutter kicker signal, but a bullish signal. And doing a J-hook pattern off the T-line. Good indication that this is going to be an uptrend some more in that area. Same thing on the shipping stocks. You can see on DHT, the fry pan bottom, J-hook pattern, classic pattern. Other stocks in that sector also picking up some strength. Now, the fry pan bottom J-hook pattern is basically a very high probability trade setup. We are recommending ZIM because there's your fry pan bottom. What's your expectation out of a fry pan bottom? Strong price move. What is your prerequisite for a J-hook pattern? A strong price move. Call this a classic pattern because this is usually what happens. It comes out of a strong price move created by the fry pan bottom, goes into the next wave. Now, what is the best option trading strategy for here? Well, we know we've got some uptrending stocks, but we've got a market that is in a strong downtrend. You might not be buying calls here. You might be doing a call spread, or maybe selling a put spread. These are the type of things that you want to be more cognizant of. That what is the overall market direction doing? What is the pattern doing? You've got a classic pattern that's setting up. Looks like it's going higher. There's option strategies that take advantage of that pattern setup, but also being a little bit cautious of the overall market trend. So we also want to be able to utilize the market trend to tell us which stocks have the best downside potential. We're recommending going short on run because look where the bearish belt hold signal occurred, right smack dab at the 50. Probably will be buying puts on this one. But there are times where you're buying puts. There's other times where once you've established a position and you want to enhance those returns, if it opens lower on Monday, starts trading lower, we'll add to that by adding some put spreads. That bearish belt hold is a very strong indication that there's been a major change of investor sentiment. Not only a change of investor sentiment, but next open will tell you how much the force will be to the downside. Again, right in here, buying puts. Down here, your most logical bearish option strategy might be enhancing that trade by buying some put spreads. So anytime we see a candlestick sell signal, like a bearish kicker signal, a bearish flutter kicker signal, we can now devise the best strategies to take advantage of that trend, but also addressing what is your risk factor if you're enhancing that trade, not buying more puts, but maybe selling a call spread or buying a put spread. So the logic of candlestick analysis is, where do we buy situations, and where do we add to those situations by a modified trading strategy? This is all just simple common logic that if as the spread or as the risk gets bigger, but the downside potential is still there, spreads might become the best opportunities. So we always put out the 2-week, oops, didn't do something there. Put out the 2-week free trial, but also want to announce that we're going to be doing a mini spotlight training session on March 4th, Saturday. They're scheduled for an hour. They usually go for 2 hours. But you get a lot of information, the logic of what trading strategies work the best in specific market conditions, as well as specific candlestick signals and patterns. That'll be it. We'll see you in the chat rooms.